There's a lot going on in the carbon markets at the moment, with more companies increasing their ambition with net zero targets, and also with COP26 having just finished. We've seen a significant shift in the voluntary carbon market in recent months, both here in Australia and globally. So I'm very pleased to have been able to sit down with Brad Kerin from Carbon Market Institute to discuss this topic. Brad works as the General Manager leading strategy, finance, international and nature-focused portfolios for Australia's leading carbon market and climate action industry association. I'll ask a few questions here. I'm sure you could talk about them for hours on end, but if we could try and rein it in for a couple of minutes, we'll see how we go. What do you think are the key takeaways for Australian businesses from COP26?
Yeah, it is a hard question to distill down everything that happened there and try and understand how it's relevant to Australia and Australian business. Before I get started, I do want to add my acknowledgement of country, the elders past, present and emerging of the Wurundjeri people of the Kulin Nation from the country which I'm joining you. So COP26 is an interesting beast for any of you on the call who've ever been or logged into different things. It's an exercise in trying to compromise as much as possible in terms of trying to get agreement on really difficult technical things and trying to take account for the agendas and priorities of nearly 200 countries. And so what I've heard from some negotiators sometimes is the best outcome is when everybody's equally unhappy, but that you're still making progress. So it is interesting watching what comes out of COP. And unremarkably, there's always criticism of COP and criticism of the outcomes and that push that we have to be more ambitious and we have to move further, and rightly so. What we do see out of this particular UN Climate Summit was that global ambition for climate action was boosted, but we recognise that more action and ambition is critical this decade to be undertaken by countries, by companies, by society, in general. And what that means is that Australia and other countries like Australia that are trade exposed, have high emissions sources, will be under greater scrutiny over the next year at COP27, and when they do a global stocktake or review of how countries are tracking against their Paris targets at COP28 in 2023. One of the key things that came out of COP is that we finally have the rules for Article 6. And for those of you who don't know Article 6, it's the rules of how carbon markets will evolve within countries, between countries, and then globally. And what we got out of those rules that they've been negotiating on for 5 years is critical bridging proposals, I suppose you could call them, or key compromises around a lot of technical critical elements that now we have those rules, and they mean that we have a platform for high integrity, transparency and accountability, but it will require corporates and countries to be really vigilant on the integrity of emissions reductions, of units created, of pledges made, and also the emissions reductions, the numbers that they report into the UNFCCC. A couple of other points. Alongside the formal negotiations, there's always a lot of side events at COP. There's a lot of pledges made, a lot of announcements. And one of the things that really came to the fore this year was around capital cost and investment. And so one of the key takeaways for us is that global capital costs and risks are rising for carbon intensive countries and companies and the projects that particularly generate emissions intensive energy. And so amidst this deeper investor activity, scrutiny, that corporate disclosure piece and requirements around disclosure and management of climate risk and finance is going to be more and more critical. So that's probably a couple of the key ones. On that sort of finance piece, there has been a bit of a failure to deliver on public and private finance, climate finance pledges. That sort of adaptation piece, financing adaptation for vulnerable communities, small island states and others that are feeling the impacts of climate change right now. And that remains a stumbling block for countries who have had the majority of the impact on the globe that their commitments on climate finance aren't reaching those goals that we need. So there's a recognition now globally that we need to double adaptation funding, and there will be an increasing dialogue around loss and damage that is really, it's barely keeping developing countries at the table, and those issues will really be important next year and centre focus. The final two areas are really around the phase down and phase out of coal and fossil fuels. And throughout COP, we were heading towards a final decision that was saying and recognising that we need to phase out fossil fuels, but unfortunately, right at the last minute in the closing plenary, India India on its own really stood up and said, no, we can't support phase out of coal. We need to support a phase down of coal as well as a phase out of inefficient fossil fuel subsidies. And it's unabated coal. So there is some language there that softens it a bit, but what it does tell us is that there is, perhaps slower than we would have liked, but a trajectory towards phasing down and towards less dependence on coal and on fossil fuels that's underpinned by research by the IEA, the International Energy Agency, and many others. Finally, that big piece that comes out of COP and has been increasing is the role of nature. We understand from many reports and many international bodies is that nature is 1/3 of the solution to climate change. And what really came into the discussion this year was an acknowledgement that we're facing a climate crisis as well as a biodiversity crisis, and nature is a key pillar in looking at both of those. We also saw in the Article 6 rules and final decisions was an acknowledgement of co-benefits, the need to take action on other sustainable development goals and the role of nature in doing that, and also supporting the rights of Indigenous peoples, human rights, access to water, eradicating poverty, vulnerable communities. So there is now a greater emphasis on the importance of protecting, conserving and restoring nature as well as ecosystems. So that's forests and other terrestrial and marine ecosystems, and using those as a source to drive net zero emissions. So in the context of Australia, Australia is well positioned to become a global leader in nature-based solutions development, in the knowledge brokering, the finance, capacity building, measure reporting and verification. But it needs to nurture, Australia needs to nurture its crediting mechanisms, ensure integrity, and look at other ways that investment in nature and accounting for nature-based solutions can be built into other structures that we have. So there's a lot on the table. I think shared in the chat, there will be a link to our key takeaways from COP26, which outlines in much more detail than I can here some of those key points, as well as an explainer of Article 6 and how that works. So I'd encourage you to take a look at that. But yeah, there's a lot that has come out of COP, and it will have a lot of impact on where we're going from here on in.
Thanks so much for that, Brad. I'm actually impressed with how succinctly you've managed to put that together for a 2-week event and everything that went on there. So yeah, kudos to you. So, I mean, it's really exciting for us to see companies getting engaged with climate change and what they can do. Where do you see the most interesting opportunities for Australian companies to be part of the net zero transition?
I'd say there's probably 5 key areas. One is around our capability and the need to invest in nature. Second is around climate finance. Thirdly is the role that Australia can play in exporting low carbon or zero carbon energy and emissions reductions units, carbon credits, to the Asia Pacific region and supporting that regional decarbonisation. Fourthly, it's the role of carbon markets development and leadership, that knowledge and expertise we have over the last decade and a half in developing markets. And then it's also the capability to understand how we better manage data, build technology and innovation, and calibrate that and deploy that at scale. So I guess to unpack that a little bit further, I'll probably go in a bit of a different order. The investment in nature and the role of carbon market development and leadership. We've got a decade, particularly through the Carbon Farming Initiative Act, what's now transitioned into the Emissions Reduction Fund. What we've got in the market is a lot of knowledge, experience and expertise in how to undertake projects, how to manage the finance, the risk, the measurement, reporting, verification, the application of technology, understanding a really world-class regulatory framework that interlinks with other government frameworks around giving financial advice, around consumer protection, other bits and pieces that I guess we take for granted, and there's ongoing criticism of it, and that's fair. But what we have here is well and beyond what other countries have. And so we have an opportunity to invest in that infrastructure, invest in that knowledge, and to be able to take that out to other countries. On the financing piece, you know, Sydney particularly, but Australia's finance market is really nimble and innovative. And there's an opportunity there for the finance community in Australia to develop the low carbon, zero carbon financial products and services that can enable investment at scale in technologies, in emissions reduction projects, in those step change technologies that are required to decarbonise the economy. And so what comes out of that is the opportunity to invest in data management and technology innovation. What are we going to need in the next 10 years to get to a place where decarbonisation, zero carbon activity is business as usual? How do we make sure that our accounting of that, of sustainability, of emissions reductions, is integrated with our financial accounting and reporting? What are those tools that we need to integrate this into business? We've got the capability here. We've got CSIRO. We've got a lot of small businesses that are developing these tools. And then we also have that capability with the huge landmass and many different well-established and mature industries to take technologies from overseas and calibrate them in our existing operations, understand how they get deployed, and then take that knowledge back out to the world. Finally, on that point, we do sit in the supply chain of most of Asia. Our top 10 two-way trading partners all have net zero commitments, mostly by 2050. And so what that means is that increasingly those countries and the companies in those countries are going to be looking for low carbon or zero carbon inputs, particularly energy. So what's the role of Australia to be able to export energy and other solutions into those markets and to support those decarbonisation opportunities? So I think there's a lot that Australia can do, but it does require people to be conversant in climate change and business and decarbonisation lingo. It requires people to come to webinars like this and to meet people and understand what they don't know yet, and to be able to position ahead of these changes that are coming so rapidly now.
Yeah, and it's really interesting that you say there about bringing carbon accounting in with financial accounting, because, you know, if we look at the Australian Carbon Credit Unit, or ACCU, and what's happened with the price of that in the last couple of months alone, it's doubled from $20 to $40. And, you know, it really is demonstrating that it needs to be part of financial accounting as well. We have to bring both of these together. And I think that, you know, the change in price is really going to drive that. So what do you think have been some of the drivers of the market recently?
Yeah, look, the spot price is fascinating to look at. It's been such a short time frame to see a market explode like this. What really, you know, and hitting $40 a tonne for an ACCU today on the spot market is unheard of. And for a lot of people that have been modelling this stuff, $40 a tonne is what they were thinking we might get to in 2030. And, you know, it's 2021, not even 2022 yet, and we've hit those values. And what that says is that there's a lot of factors that are kind of coming to a bit of a clinch point. One is the basic, you know, supply demand price curve, basic economics. If there's low supply, there's increasing demand, the price is going to go up. So that's pretty much what we're seeing here, is that we've got a lot more businesses coming into the market looking to purchase Australian carbon credit units. There's very low supply, mainly because the majority of the carbon projects that have been developed in Australia have been contracted directly with the government. So the government's been the primary purchaser of abatement in Australia, and so there's been very little abatement available to the private sector. So there's a lot of activity happening, a lot of emissions reductions projects happening, but it's all going to the government and being reported to the UNFCCC. So you get this this difficult space where you've got a lot more people wanting to enter the market, and they're being forced to buy small amounts of ACCUs, or looking at forwards markets. There's probably next year going to be some emissions exceedance under the safeguard mechanism, some liability, because we're seeing some forward trades for delivery in February 2022, February 2023, and that is the timing that really companies have to true up to manage a liability under the safeguard mechanism. So there are probably, whilst we don't have full visibility on that, there's probably some emissions exceedance, some compliance that requirements that are driving that investment, as well as just a general interest from corporates, from state governments, from other subnational actors, cities, communities. So then what's driving that? It's the broadening understanding that climate change and climate risk and the climate crisis is here and it's impacting us, and wanting to actually start to do something about it. We're seeing an increasing sophistication of climate strategies within organisations, and an understanding from boards that there's a fiduciary responsibility of that sort of in that governance space to look at the risk of climate change to the business, and to take on board the increasing response from investors scrutinising what you're doing about climate change. So it's investors, it's communities, it's subnational policies, it's not necessarily in Australia, but internationally, it's national policies. I don't think we're quite there yet, given the government's focus on a voluntary market. But a lot of these things are hitting us now pretty quickly. So, but the one thing that I think this doesn't tell the full story about is that longer term trajectory of emissions reductions, of carbon credits. What we're hearing anecdotally is that there's a lot of companies that have done the strategic piece. They understand what their liability or what their net zero trajectory is over the next 3 to 5 years, and they're starting to invest in longer term offtake agreements. So they're contracting directly with project developers or intermediaries to say, I'm going to have this liability in 2023 and 2025. I want to invest in projects now at a fixed price, or a certain price that's going to definitely be lower than that $40 a tonne spot price. And that activity is increasing more and more, but we don't see that because that's all commercial in confidence, and there's a competitive edge to keeping that stuff quiet. So that really depends on talking to companies like South Pole and others who have some of that knowledge about what you should expect, when you should be looking for delivery of those units and use of those. I think this is a market that is moving and changing, and as you can see with those prices shifting so quickly, that we need to be able to think ahead. It's not enough anymore to just come into the market and go, right, I need this now. You need to think ahead.
Yeah, and I think that completely mirrors what we're seeing as well, and the kinds of requests that we're getting now. It's moved away from that annual spot purchase to actually, okay, how can I secure a price in the coming years to make sure that we're fully equipped to prepare for this. So one final thought from you, Brad, kind of how do you see the market developing just in the next year, potentially beyond, and what are going to be the challenges for buyers in that market?
Yeah, look, a couple of things spring to mind. Well, three things really. One is that we have the rules around Article 6. We have the high level framework and structure, but over the next 12 months and at COP27 next year is when a lot more of the detail is actually going to be developed, and that's when we'll understand a bit more. So carbon markets can start to develop now. We have the clear rules, but I think there's still more to unfold and understand about how things will actually work on the ground. So keeping a close eye on that, being able to understand what those issues that are being negotiated are likely to be. One of those is Article 6 includes the use of emissions reductions and removals. But one of the things for negotiation at the end of next year is whether avoidance activities will be included, and that impacts some project types in Australia, including potentially things like savanna burning, really critical Indigenous-led projects that have so many more benefits than just the carbon. So there's some of those things we really need to understand how the market's going to transition, and Article 6 and understanding how that's going to work will continue to be one of those things. Avoided deforestation is another one of those. That's sort of internationally REDD plus other activities that conserve really important existing rainforests and other things. The second, kind of aligning with that point, is I think 2022 is going to be the year of integrity. Really what's come out of COP and increasingly from strong green groups and a lot of other reports is is the questioning whether emissions reductions are additional, whether they are post 2020, whether they are actually real and meaningful emissions reductions. So what's going to be critical for countries like Australia who have a crediting scheme, and for companies that are buying carbon credits, is to really understand the environmental integrity of the units that they're investing in. And that it's really technical. It's a, I suppose if you compare it to other commodity markets, a grain market, you can pick up a bag of grain, you can put the grain in your hand, you can taste it, you can smell it, you can maybe ask a couple of questions, but you kind of know if it's good or not. With carbon, you can't pick it up and touch it. You can go out to a project, but there's so many unknowns about that project, about how they measure, report, verify. Do they pay communities? Have they got Indigenous community consent? There's so many more of those things that you have to understand. And if you don't understand that and you make a bad decision, the scrutiny on your net zero claims and the use of those units is going to come down on you pretty hard. So it's really important for buyers to understand what they're investing in and to understand those things that they don't know yet. So you need to build your own capacity. You need to have relationships with experts, talk to people like South Pole that have lots of experience, and to know what the questions are that you need to ask to get that information. I think with Australia having a net zero commitment, this big focus on carbon and climate change, there's a lot more financial operators and businesses sniffing around the edges. So venture capitalists, other organisations that might want to jump in and make a quick buck, as they often do in other markets that sort of surge and then sort of flatten out. And so one of those things you're going to have to be really aware of is the behavioural integrity of the market as it expands and shifts. How are people going to act? How do you protect yourself? And so the Carbon Industry Code of Conduct is one of those things that sort of sits there as a voluntary consumer protection watchdog in Australia's carbon industry, to really try and understand how we protect consumers and clients of service providers, of financiers, of others that provide advice. So I think it's watching markets, it's making sure you understand integrity and how to do your due diligence and manage risk. And then thirdly, the impact potentially of, well, the impact of an election early next year and ongoing negotiations as we move into an Australia with a net zero target.
Very handy tips. Thank you very much. I think that's all we have time for in your section for now, Brad, but thank you again for your insight.